present mementos to our esteemed panelists today. Their participation in today's discussion is highly appreciated.
Before we start, ladies and gentlemen, allow me to just set some brief guidelines on how this will be conducted. I will invite each of our panel members to give a 5 to 10 minute presentation of their views on the GST and Malaysia's readiness to implement the tax system. Thereafter, I will immediately open the discussion to members of the audience. I hope, ladies and gentlemen, you will ask questions, although this is a very sensitive matter. Nobody likes to pay tax. And I hope you will ask questions, although in the interest of time and to allow as many as possible to be involved in the discussion, I seek your cooperation to be brief in your question or the presentation of your views.
To share our view on this important issue of GST, being researchers from Malaysian Institute of Economic Research, I am by profession is an economist, so my view will be confined to how economists look at GST as what Dato' Sri Second Minister mentioned just now, tax to replace sales and service tax. But let me first, as an economist, I always look at the broader view that first of all, why we need to change from sales and service tax to GST. Of course, we look at from the broader view what Minister has mentioned several times, and before that also has been mentioned several times. The main reason is because of we have big aspiration that NEM by 2020 we want to achieve some goals. So how are we going to prepare ourselves to achieve, to ensure that at the end of the day, at the end of 2020, or by 2020, we will achieve that. So that means anything that will hinder or hamper the achievement of goal 2020 or NEM will be eliminated. So SST or sales and service tax has been told by many people is not an efficient way of collecting tax because of its leakages, and therefore you can see what happens is that when we implement SST, and no wonder that many countries have already implemented VAT or GST, and we are quite late in implementing GST. By 2015, April 2015, we will be implementing it, inshallah. So this is the way of reform our economy, structure of the economy. And you know that in the end there are a lot of SRI or structural reform initiative, and one of it is a tax reform, and inside the tax reform is a GST. And therefore, when we implement when we implement SST, our tax on revenue collected from indirect taxes, SST is indirect taxes, does not contribute larger than the direct tax. So one of the main contributor of tax revenue in Malaysia is direct tax. And you can see that in most cases, in most countries, the indirect tax should be contributing more. That's why when you look at the whole tax reform, that means the introduction of GST will enhance the tax revenue collected for indirect taxes and at the same time those indirect, those of direct taxes, the corporate tax and the personal income tax (PIT) will be reduced. So this is a kind of tax reform that the government and we as an economist, we look forward to see this to happen. And of course, that is from the public finance point of view. To address the issues of fiscal deficit, to address the issues of rising public debts. But of course, to give or to see that GST is the only instrument to address this issue of fiscal deficit and public debts will be a bit unfair, because public finance is a wider scope than is not only touching on the issues of revenue collection but also on the expenditure. So I think, but that will be different issues. But now let me again zero in to the GST. GST is a value-added tax. In a more general term, is a value-added tax. It's tax on final consumption, and therefore, I think the definition has been mentioned repeatedly many times, and therefore, any credit can be claimed from the sales minus purchase from other firms, including, I want to bring your attention here, including purchases of capital goods or capital equipments. And I see this point is very pertinent here, because when we allow credit for capital equipment purchase, then this will spur investment. That means when you look at the whole when you look at the whole what do you call that structure of the GSTs, in one hand we encourage the purchase of capital equipment, and on the other hand, when the whole tax reform try to lower down the corporate income tax and personal income tax, as what is mentioned earlier on, that will also encourage inflow of foreign investment coming into this country. But again, this is how we, again, that depends on how we design our GST. I consider that GST is just like wearing a new suit. You can design the new suit in a different way. Whether you want to put it a bit tight here or a bit tight there, or loose here and loose there. So it has to be designed properly. I think my colleague will go more detail on this. But another important thing about GST here, which has been talked about by many people, is the distribution effect. Of course, from government point of view, or from public finance point of view, we want to collect, government want to collect revenue so that it can address the issues of fiscal deficit and public debt, rising public debt. But on the other hand, I think the more pertinent issues or pertinent question is how it affects different classes of people. And again, here, what the government has done is try to minimize the effect on lower income group by zero rating some of the essential. But here again, the question, I think the main question here is whether to impose or to fix at lower rates, and it cover as much as possible the tax community. That means as broader as possible. But the second option is to put at certain higher rate. Let's say now it's about 6%. I was told that the 4% will be revenue neutral, and 6% the government will earn a little bit of revenue from that. So that means you put a higher rate, then we zero rated some of the items. So this is a kind of a design of a GST which will have which will have a different implication or different effect on the distribution. Of course, the zero rated, we want to make sure that the lower income group will not be adversely affected. However, if we zero rated so many or too many items, then we will not see the effectiveness of GST as an instrument of tax or as an instrument of economics to spur growth of the economy. I think I've occupied my time. Thank you very much. Maybe I join you again on the question and answer. Thank you very much.
Thank you, Dr. Karya. May I now invite Dr. Virendrajit Singh, co-founder and chairman.
Member of the MAS, that's not good enough for me. And when you talk about GST, it's all about consumers exercising their rights, and that's something I'll talk about a little bit. I mean, it's for us to be able to do what we think we should be doing. Now, I will touch on a little bit that what my friend Dr. Zakaria also mentioned. I'm one of those who have been very supportive of the GST right from the beginning. I've been involved in 1989 when I was an academic at the University of Malaya and invited to have a roundtable discussion with the then finance minister on what was then called SST, or intended to be, but that was those days. And then after that, the GST and all the other subsequent discussions. So I'm one of those who feels that we should have done it long ago, but better late than never, as has been mentioned. I think what has been announced by the Honorable Prime Minister was a bold step in terms of making that decision, because the government has been a little bit unwilling to make that decision in the earlier years for various reasons. So it's good. It's part of an overall transformation of the tax system, but I think just transforming it by introducing GST is not enough. There's lots more we need to do. I felt that it was too bold a step to commit reductions in corporate tax rate and personal tax rates when we know our revenue collection mechanism and the margin between, the deficit issues are still not resolved. So I think it was bold, but then again, you don't go far if you don't take risks, and I think the government decided that we should be able to collect extra even with the reductions in the income tax rate. So that's fine. The reason why I think the government felt we needed to give some income tax breaks is because they wished to sort of get more acceptability of the GST. I'm one of those who felt that there is no need to get acceptability of the GST, because the GST is nothing new. It's just a different format of a tax on goods and services. We all have been, in some way or other, paying sales tax and service tax. And we are, I think, familiar with that. And fundamentally, it's just a replacement. So in that sense, I felt, in essence, in terms of what the government has done, fine. There was a balancing act that you had to do, and so on and so forth, which will still result in some positive benefits in terms of the additional revenue that the government wishes to gain. Was it surprising? Yes, in terms of the rate, from 4 to 6, but I think we also can understand why that rate went up from the expected 4%, because in the interim, when we were talking about 4% in the earlier years, service tax went up to 6% just a few years ago. So the break-even point was moved up higher, and therefore you had to look at a slightly higher rate. So I can understand all that. So I think it was a good balance in giving you some tax benefits, income tax-wise, as well as introducing a GST. The beauty of a GST is that it is a very good tax if you have it imposed on a broad base. And this is the challenge we have in Malaysia. The bigger the base on which you impose a tax, the lower the rate can be. And in reality, the government had to balance a lot of issues, and the list of zero-rated products and exempted items is quite long. My only concern in Malaysia, politics being what it is that the list will grow longer. I hope not, but the challenge is that in terms of lobbying and so on. The best system in GST, what New Zealand had introduced years ago and Singapore had, is broad-based, low tax rate. That's all, simple mechanism, most of us understand that. But nevertheless, we wait and see. It was quite disturbing that some ministers have said we're willing to, listen to industries, want to make requests and all that, and that will never end. If you make requests, everybody wants a zero rating. Zero rating is the best thing because it means you pay nothing, government gets nothing. So that cannot be good for the nation. It's good for you, but not for the nation. So anyway, we need to be aware that this is nothing new, and a lot of hoo-ha about the GST is fundamentally because we don't understand how it really works through the production chain. And we need to understand that, and once you understand that, then things will fall in place. The challenge is there's a lot of onerous burden on everyone along the chain of production and distribution, manufacturer, wholesaler, retailer, in terms of documentation, in terms of looking at how GST impacts your pricing versus how it impacts you now with sales tax and service tax. And then establishing how it impacts your pricing strategy and marketing strategy and so on and so forth. So there is a little bit of accounting that has to be done, but I think that's good because the accounting, the level of business record keeping in terms of a lot of the SMEs in Malaysia is very appalling. And I think it's time we uplifted the record keeping ability. GST will push some of these businesses to really keep track of your inputs and outputs, and hopefully record keeping will be fine, but then there's a cost. Yeah? So nothing ventured, nothing gained. We'll see how that works. So those are the issues. Now let me also perhaps point out a number of suggestions in terms of how we can improve things, fundamentally in implementation and going forward. One of which is there needs to be as much guidance, as much of the subsidiary legislations or rather more guidelines that need to be issued so that businesses get prepared, because the law is not yet enacted. The bill is not yet tabled. It will be probably end of the month or maybe even December, and then it has to be passed through Parliament and so on. I was one of those hoping that we could do it all together at budget day, everything was out, and so, be clearer. But anyway, I understand it's on the way. So that's number one in terms of the legislation. Lots of guidance is already there on the website of the Customs Authority. There's a customs portal. A lot of guidelines are there for various industries, and recently a lot of forms have been issued in terms of registration. It's advisable to look at that, understand this first, and also that's good. That I think is good. Release as much as possible so that the businesses understand things faster. The other issue with GST is unscrupulous traders, of which we have many in Malaysia, as we have in many other developing nations. Not understanding things and just increasing everything by 6% without realizing that actually, in some cases, your prices actually can go down if you account for what you pay now in terms of sales tax, and so for which you never get a sales tax credited back to you versus the GST. That analysis needs to be done by traders, and some will be unwilling to do that and simply increase it by 6%, and that's it. So I think there's a lot of education that needs to be done, and I think the Ministry of Finance and the Customs could perhaps lead the way in terms of coming out with clear examples of how it should impact you, and look at a few products and say, this is how it is in terms of sales tax, how it impacts you, this is how it will be with GST. And push businesses to understand this, because if you don't say it like it is, many will cloud the issue and just simply increase prices unnecessarily. So monitoring unwarranted price increases, the Anti-Profiteering Act is there, has been there for more than a year. My only comment, as we all are, cynical about some of the enforcement mechanisms in Malaysia. How will this be enforced? I have no confidence, with the ministry responsible for enforcing the Anti-Profiteering Act. I hope my confidence level can be increased once I know how the ministry, this is the Consumer Affairs Ministry, how are they going to impose this? They need to have accounting knowledge and need to know. They can't simply accuse someone of increasing prices. You need to have a way of establishing whether the price is reasonable. We hope that can be done. And I think consumers need to then look with GST what the price is now. If someone charges you a bit lower with GST, another one charges you a bit higher, you know where to go. So I think consumers have the greatest power in terms of determining who we should buy from, and GST will give us that power in terms of making that decisions and avoiding traders who we think are unnecessarily increasing prices. And that's what I meant by consumers standing up for their rights. And I think there will be a hotline and so on where you can complain, and you know, the problem with hotlines is that they get too hot. And so, you know, you have to sieve out what's a reasonable complaint versus what's not. So those are some of the issues in terms of what the consumers will face, what the traders will do, and what the traders will face, and what the government will face in terms of lobbying and so on and so forth. Other than that, it is fundamentally a very complex tax. GST is complex because it affects the whole chain. So we need to understand this further. And to be fair, this has been around for quite a number of years, and many businesses have sat back and not bothered to learn. Now is the time where we really need to get up to speed. Finally, I think when I said that GST is not the only thing that can fix the fiscal issues that Malaysia has, in terms of a tax system, I think we need a fundamental review of the whole tax system in Malaysia. And GST is part of that process, and I think the tax review panel that was set up way back in 2005 has done a good job in terms of managing GST and establishing the various institutional framework and legal framework and so on. But what is missing is the rest of the income tax structure, whether it's the tax incentives, whether it's the personal taxes, corporate taxes. I think we need to do a public review of the whole income tax system, where GST obviously becomes a very important component, and look at the rationale as to why certain taxes were imposed, are imposed, and will be imposed, and whether it meets the needs of the nation as we move towards this target in 2020. Is our system benchmarked internationally, and is it robust enough to enable us to function as a developed nation when the time comes? Does it meet the needs of our nation as we grow along that path? That, I think, is also something we need to do, and I do not think that's something that's left to the government to do. It has to be a public review and come up with captains of industry leading this, and come up with reports and give it to the government, and the government then decides which elements they can actually implement. So I think those are the few comments that I just wanted to say, and I would like to pass it back to the chairman, and then we'll address some questions as and when they come along. Thank you very much.
Very good morning to Mr. Chairman. First of all, I'd like to thank Business Times for inviting me to be here. already have a very prominent economist talking about what's probably going to happen to the economy, so I don't know how much more I can add in terms of GST. But let me speak on behalf of a rating agency. Not a very popular institution these days, but let me just give a view from a rating agency on this issue on GST. Now, if you can recall, a few months ago in June and July, Fitch Ratings actually downgraded Malaysia's sovereign outlook, not rating, the outlook from stable to negative. I think that was the first downgrade actually we experienced since we recovered from Asian financial crisis last time. Now, one of the reasons that they mentioned that, and if you read the report, is actually the revenue. Malaysia's revenue as a percentage of GDP, if you look at the past 3 years or so, it's been around 25%, and lower than the countries in the same rating band. Malaysia's rating band is single A. Yeah? So if you compare with South Korea, you compare with Israel, Poland, Slovakia, average revenue for this country is about 35% of GDP. That's the first number I want to give. And if you look at the structure of expenditures and also the revenue that we have actually generated over the past 20 years, let me just throw in some numbers. In 1990s, between 1990 and 1997, prior to the Asian financial crisis, we were actually generating revenue at about 12% per annum CAGR. 12% per annum revenue. Expenditures 9% per annum. That was between 1990 and 1997. Now, 10 years ago, between 2003 until 2012, revenue was growing at about 9 per annum CAGR. Expenditures growing about 12. So it's actually the other way around. So that's the reason why we have this fiscal deficits for 15 years, not surprisingly. So lo and behold, there is an argument, look, we have to find a new source of revenue, and lo and behold is GST, at least from the government's point of view. That's number one. Now, number two, if we look at what Fitch has actually written there, Malaysia's revenue tend to be oil-related. 1/3 of revenue is actually oil-related, which is, I think it's about 33% in 2012. That one was actually about 20%, 22% in the year 2000. Went up to as high as about 40% in 2009, then came down to about 33%, but still, that's about 1/3 of the revenue is actually oil-related. So again, lo and behold, the argument is we have to find another ways to generate revenue. Again, argument is GST, so that's number two. And number three, now this is something which I think you have to read in between the lines, because Fitch did not actually mention that specifically. But it mentioned that subsidies in Malaysia was growing at a rapid pace, and in the year 2012, at 44 billion, it was growing at about CAGR, about 36% per annum in the past 10 years. Yeah? So the argument is that, okay, we have to reduce the amount of subsidies. But the thing is, if you look at experience in India, Indonesia, and other countries, it's not very easy to actually cut subsidies. What you can do is actually you can rationalize the subsidies and probably trim a little bit. That's all that you can do. Because it hits the inflation, it hits the pockets of the low income group. And so the incentive to actually cut subsidies is not really there. You know? But since we are cutting it anyway, we have to do it slowly. And because we are going to do it slowly, the fiscal health is still has to be controlled. And again, one of the ways to control it, since we cannot cut subsidies substantially, we have to actually generate more revenue. Lo and behold, the GST again. 3 reasons. But, now comes the but. We have a lot of buts here. Number one, can GST actually provide that sort of revenue that we are hoping or we are imagining? That's the big question. Yeah. I think the officials, and I don't know whether Dr. V has actually worked out the numbers and so forth. I've seen some of the numbers, the estimates in terms of revenue. How much is it that we're going to generate? I think the numbers that we have, at least the ballpark figures, I don't want to go into the details of the numbers, but the ballpark figures, yeah. In the first year, we're going to generate 50% more than what we have. if we were to use the SST. Right now, if you look at the numbers in SST, for SST in 2012, it's about 16 billion. So if let's say by 2014 we have 18 billion SST, and if we were to implement GST, it will be about 50% more than that amount in the first year. Okay, that's the ballpark figure, at least the numbers that have been thrown in the media. In the next 5 years, 6 years or so, by 2020, the estimates that we have from economists is about 2.5 to 3 times more than what we have in 2014, for instance. So that's about 2.5 or 3 times more than 16 or 17 billion that we have in 2014. That's from the revenue point of view. Is that enough? Just like Dr. V mentioned just now, it's not just from GST. We have to find revenues from other sources as well. But yeah, it is some additional revenue, at least from the point of view of the government. Now, there's another but here. I just want to wrap this very quickly. On the CPI, a lot of things have been written on CPI. Very interesting things have been written on the prices. Some people are saying that prices are going to go up. This is going to be inflation. Now, there are some people who I read said that prices should come down, actually, because of GST. Textbook economics says some prices can come down, but that's, I think, the fairy tale in the textbook. I'm sorry to say that. You know? If you were to look at the argument, prices will go up, let's say, a bump in 1 year. That was the main argument. There's a bump in 1 year, and there won't be any inflation. That's the general comment that we have. Okay, let's say you have an inflation about 2%, there's probably a one-time jump in prices. This is the experience in Australia and also in other countries. One-time jump, 4%, let's say from 2% to 4%. And then slowly inflation will come down to about 2%. That's the good news. Now, the not so good news is that you have a bump up to, let's say, 4%. The additional 2% coming in the following years is actually on top of that 4%. So prices are still going to be slightly on the high side, if you look at it from that way. So that's the reason why the government has actually come up with measures to ensure that some group of people can be compensated for this. Now, the thing is, when people hear about the GST and everything else, just like what Dr. V was mentioning just now, the Anti-Profiteering Act 2011 and so forth, I think that's also the key thing. Because let's say if you impose that on petrol, 2 ringgit and 10 cents now, 6% on that, you know, and traders can start saying, look, I have to pay a lot more for petrol and so forth, and therefore I have to pass it down, even though I'm producing, you know, I'm just in food business, I have to pass it down. So these are the things which may happen, and that's the reason why I think in New Zealand and in Australia, that sort of bump, you have one-time bump there, and then, you know, that 2%, that increase in inflation can come down subsequently from there. But that initial bump probably going to happen. You know. People say that's not inflation, but still, in terms of definition, it's not, because it's just one-time hike. But in terms of price increase, yes, it's probably going to be in price increases. So let me just stop at that. Let the other speaker actually give his thoughts before we can actually address any other questions. Thank you so much.
To the question, goods and service tax, are Malaysians ready? Are Malaysians ready? I think accountants are ready, and have been ready for a long time. But as consumers, are we ready? It is my opinion that at this stage, we are not ready. At this stage, we are not ready. Since GST came into the open domain, approximately in about 2005, since then, what is the understanding of people of GST? Now, whether we like it or not, since it came into public domain, orang yang rajin turun padang, or the people who are going out to the social media, to the communities, and explaining, a lot of people who were giving wrong information. Yeah? And what it creates is it creates an environment of fear. It creates that when GST comes, our life is going to be miserable. There's going to be a lot of suffering. This is the mindset of the people. Yeah? And this has been going on both through social media as well as direct face-to-face. So this has been the environment, at least for the past 5 to 6 years. Now, we did a survey through our own, we did a focus group actually with 9 groups, our research center, different age groups, different races, and we asked on 3 issues, food prices, subsidy increases and GST. And I can tell you almost unanimously whether different ethnic groups, different age groups, even different political affiliations, consistent. People don't understand GST, but they are dead against it. And when it comes to subsidies, do you think subsidies should be removed? No, subsidies should be expanded. Subsidies should be expanded. That is the thinking of the people. And that's the thinking of the people. That's where it is now. And even the current approach of communication, Dr. Vinderjit is an excellent speaker. I've attended many of his presentations. I know when distinguished guests like you sit, you can understand 100%. People like me sit, I think I said something important. But if the riot sit, I don't know what he's talking about. So it means communicating in direct, addressing fears, addressing uncertainties, giving clear information. And more important than just giving information is this concept of engagement. Okay, now government is saying these are the items and all that, but it would have been a lot better if you come out through this through engagement, so that people feel, okay, this is our needs. And when you're designing your GST or taxes, you're also looking at our needs, and it's a balance. Of course, it cannot be 100% what Rakyat want. I think it's fair to say everybody wants everything free, but that engagement process gets people involved. But once that is lacking, now it's a matter of information. I think it's going to be tough because people have a certain mindset. And I think the current approach I think the media is excellent, social media is excellent, but it requires us to meet people, go to the ground, go to communities, rural or urban, to explain, address the issues, and engage constructively. I think that's the way forward. If not, I think there will be strong resistance. Now, GST is a big word, 6%, 4%, whatever. What is consumers' concern? Secondly, there's only one thing that's in everybody's fear. Prices are going to go up. That's all. Prices are going to go up. Salaries are not increasing. Prices are going to go up. Now, are prices going to go up because of GST? Are prices going to go up because traders are taking advantage? We don't know. But prices are going to go up. Now, this is the biggest fear, and I think this fear has not been addressed adequately. Very often, we are told it's a replacement tax. Yes, it's a replacement tax. And we are told it's not going to burden the Rakyat. But for an ordinary consumer, if I buy Milo now for $15, it shows $15. With GST, it'll be 15 plus something or whatever. So I did not pay tax earlier, I'm paying tax now. Of course, the concept is it's a replacement tax. So one of the things that could be done, in fact, this was one of the discussions we're having when we were having, is maybe to tell people, look, even with your $15 that you're paying now, there is an embedded tax, and this is how much it is. With this new GST, this is how much it is. Some items may go up, some items may be the same.